Hey everyone, Tom here. Today we're going to be talking about our technical analysis levels for trading Forex for this week, as well as the latest news that's going to affect those currencies, and we'll be using our top-down approach and a swing trading method using price action as a base that I think everyone is going to enjoy quite a lot. Stay tuned. So in this video, we'll be covering a lot of yen pairs as well as gold, as I think they're setting up the best, as well as we'll be using a top-down approach on the dollar index to try to figure out a little bit of a trapped zone and where we are in terms of strength of the dollar or weakness of the dollar for the coming weeks. Now, any trader or investor would know it's important to know the economic news for the start of the week and the week ahead. So websites like forexfactory.com and setting a calendar to your time zone are imperative when you're trading. Whether you're a scalper, a day trader, swing trader, or investor, you want to be aware of this news. Here we have all of the news for the week ahead. And if you were trading the Aussie dollar, RBA Governor Lowe is speaking on Tuesday. We have the Canadian core retail sales. And we also have some Euro news in terms of red news this week. But two things I wanted to bring up. Unemployment claims is still really important in the US as the Federal Reserve's moves on stimulus during this crisis are affecting currencies. And we don't necessarily need to be too into the numbers when trading Forex. But what we do need to know is we need to know when we have to have bigger stop losses. And if we're scalping into key red news, it can be a problem and it can gap and hurt your accounts. And you do not want that. From a bank holiday perspective, Japan has a bank holiday on Friday and Thursday. And usually you actually see bank holidays on Monday. And it's one of the reasons I don't necessarily love trading Mondays. I actually like to see all three markets open, as in the Asian market, the European market, and the US market open and close, check that daily, and then move ahead with my ideas for the week. And that's just something that you'll find we do a lot on this channel when we're using the top-down approach and when we're discussing the best days to trade. The best days in Forex are always going to be Tuesday, Wednesday, and Thursday. The biggest moves, statistically, you go through 10, 20, 30 years of data, you'll always know Mondays are the smallest ranges, and you have to have a little bit of a different system generally when you're picking trades on those days. So let's get stuck into the top-down approach. So for long-time subscribers of this channel, we talk a lot about the top-down approach where we go through the monthly, into the weekly, into the daily, into the 4-hour. And then if we're trading even smaller time frames, we still want to know where these levels are. So here we have a few lines, and I'm just going to go through them. The red line here is the 20 exponential moving average. The blue line is the 50 exponential moving average, and the green line is the 200 simple moving average. These are my favorite moving averages, and there are many reasons why I like these, but they are widely used in the industry. From JP Morgan to Goldman Sachs to any kind of investor, most of these moving averages are heavily used. So here we have the 95 kind of 60 support that the dollar index is reaching, and you should always be looking at the dollar index if you're trading Forex. We also have trapped it with the bodies up here just below 100, where we've got this 99.49. You might be saying, Tom, why have you ignored the wicks on this candle? And I've purely done it because of the month that was in. This month was the crisis month. This month was March. And we really want to be using the body closes and where the market ended up when we're doing our top-down analysis. It's very important. So we're finding support here on the blue line, which is the 50 exponential moving average, as well as where previous market prices happened. We want to jump down into the weekly at that point and then discuss potential things that could happen. So one is that we almost have a 20-50 cross on the weekly. We're below the 200 simple moving average, which I'd usually put a lot of weight on, but because of the whipsawing market and the fact that it's been consolidating, you can't use that as much. And we're testing key support, so expect buying pressure throughout the week here. In terms of selling pressure though, let's say it got through this zone, it might come back up, come back down, and then we would see it at least test these previous lows. That would be the expectation. So this is a key level that we would want to set alerts for if we were looking at trading Euro, US dollar, Pound, US dollar, or any of those pairs. So the 95.70 is going to be a key level break on the US dollar. I think the markets are like chess. You want to think a few steps forward. So what happens if it fully rejects next week, comes up, does something like this, and then breaks through? This actually would be a double bottom pattern with an intervening up here. And if you take the distance of this, I'm pretty sure it's going to work out where it goes to the kind of the top of this channel. So let's take that now. Look at that. See how it comes back up to this previous resistances over here? That's good, and that means the chess is kind of being played out with a logical conclusion if it was to occur. So I'd also be setting an alert for the 97.73, approaching the structure of the market that way, and noticing also on the left-hand side here, we had a bit of a bullish reversal off this low. We didn't see it this week, but then we want to go into the daily and break that down. So on the daily, we have an engulfing candle, we have a rejection from the zone, but we've seen weakness coming into Friday. It makes sense when we look at the S&P 500. A lot of these pairs are all covered, and even if you just trade Forex, the S&P 500 right now is hitting resistance at the same time that the dollar index is hitting support. It makes sense to the risk on, risk off sentiment we're seeing in the markets right now. So we're testing this low. We can see that on the daily. We don't really see anything else to be noted for. So then we go down to the 4 hour, which is probably the final time frame we're going to be looking at here. And when we draw this line across, notice how the previous supports became resistance. This is key. It means this zone is super important. 96.30 around that area, we're going to also want to be setting alerts. And the reason we do this is because what happens if it does something like this during the week? If the market breaks through and confirm closes on the 4 hour above the previous highs here and the daily, then that gives us the opportunity to wait till it gets above here. It'll be above the 50 exponential moving average. And then what will happen is, let's say the exponential moving average is here at that point. What will happen is the market will be closed above, it will come down and test that exponential moving average, and it will find dynamic support and then hopefully bounce off that level. As traders, that's what we want to do. We'd also be finding a really nice structure base down here, and it would be a good 4 hour swing based trade to take in the markets. Another thing to note, look at this dollar index. If we have a look here and we draw trend lines, and for any long-time subscribers, and definitely think about subscribing to this channel if you want to know more about these things, I'm not a big fan of trend lines, but what I can see is that the market has been bouncing in a downward trajectory channel. If we look at this and we look at the bottom, look at how the market has actually been interacting with this zone. It's often and clearly trapped. This is important because what we're going to see breaks through here, comes back down. Guess what? It's going to act as support. So we're going to have a support trend line, an exponential moving average if it gets through there, and then a range that's going to make sense with the market effectively going back and testing this 200 simple moving average. Everything will be working in unison, and it will be good for us to then go and look at pairs like the euro US dollar that are heavily correlated with this pair. So I've spent a bit of time on the dollar index this week because I think it's at this cool zone where you can be playing some chess with it and effectively taking advantage of several opportunities that could arise. We know it's trapped in a little bit of a zone right now, and we're waiting with our alerts at the key levels. Let's now take a look at the US dollar yen. So the US dollar yen has actually been incredibly boring trade. It's been stuck in a range, and on the monthly we can see this. Look at this massive wick candles. We've got clear support bodies down here. We'll just quickly draw that line because you should have that on your chart. So around 106, key psychological zone. It struggles through this resistance up here, which is the 109, 110. So we've got a big range here, but nothing much going on. Go down to the weekly, again, not that much going on. Go down to the daily, then we start to get a little bit interesting, as in we are seeing a little tight range here on the daily. Notice the body closes pretty much very, very tight within this zone. Then we want to go down to something like the 4 hour, and we want to start drawing up our support resistance. So there's a clear kind of level of support down here, and there's a clear level of resistance up here that the market's struggling to get through. So this is 107.33, and below here it's about 106.74. Now with these zones, what I like to do is I actually like to draw them like between the wicks and the bodies. And I do that because I then highlight this area, and this area becomes kind of my trigger zone. It becomes a zone where I set alerts for it, and then I watch the smaller time frames to figure out what's going on with those closes to determine whether they're going to be key levels that I need to take advantage of during that week. So we've drawn these zones up. We know the yen is kind of trapped. But then what I think is important is let's go look at some of the other yens. Let's have a look at what's happening there. So here we have the monthly euro yen. Well, I tell you what, this is clearly a double bottom to me. I think anybody will be able to see this. We've got a downward projecting market. The idea of a double bottom is it's the end of a trend and the start of a new trend. And then we have an intervening here on the monthly, and we're about to see potentially a close above that intervening. If I was to put a MACD indicator on this on the smaller time frames, I'm sure we're going to get divergence down here as well. And that always is going to be present. Got that nice kind of candle over here. Look at this nice bullish candle coming off the base. It went to a low point, then it got fully rejected where the bears basically got smashed and the bulls took control and they said, wait, no, fake breakout. Let's get all the way back up. And it has been bullish since then with nice closes. Of course, the rejection here, but nice closes in general. So the monthly is showing us a nice double bottom, which has me interested. When we go to the weekly, let's see what the interaction with the charts are. Again, if you put on an indicator like MACD, I guess we'll do that now. So let's actually add the indicator. We'll put on MT4 MACD because that's one of my favorite ones when you're looking at it. We're going to probably see divergence. We certainly are seeing divergence here where price is making a lower low, but we've also got the MACD not agreeing with that, which is of course class A divergence. And what are we seeing now? Well, we're seeing the market coming back up and testing this peak. So it's testing the peak. There is that breakout that's happened. We've almost got a 20-50 on the moving average cross, and we've got positive MACD. That's good to see when we're looking at that weekly. Go down to the daily where things really happen and it gets even more exciting. We've got plenty of moving average crosses here and we have a key zone break. Previous resistance over here has become resistance again and the market's clearly rejected that. Few things to note. Bullish hammer over here. Bullish hammers have come off this 20 moving average. We know the 20 moving average is acting as dynamic support, which gives us as traders kind of a level or a line in the sand for the next coming weeks where we expect if the market does pull back, it should find some level of support on that 20 moving average. That's really cool and definitely something that we want to be looking at. We've got on the daily here, basically we've broken past this resistance of the 121, what is this, 121.15. That has now been broken, clearly. It's gotten above that, and there's a lot of body closes here. Notice the body closes. We want to draw a line across those body closes. Very important to do, something we want to set it up for. Let's jump into the 4 hour and talk about our swing trades. So we've seen the daily and where it's closed, but the 4 hour is showing a slightly different story. It's showing that actually the closes seem to be up here at around the 121.95. That's good because that's where the market has been interacting with recently. And straight away, I'm looking at this and saying, wow, okay, we have a trap. We have a market that is trapped. It's basically in an uptrend. We are seeing that the market is saying, on the monthly, we've got that double bottom potentially. On the weekly, very similar style. We've cracked a pretty key level and we're now trading above the resistance and even above this resistance over here. So we're clearly seeing strength here in the market and we've got this trap now on a 4 hour, which allows us as scalpers, swing traders, day traders, or anything to then set levels. So we could set a level here for the 122.50. We could set a level here for the 121.90. We could basically trap it in this zone and then trade it like a trap. So we could trade it like a channel where if it broke out, we could trade it like that. And we could trade it to the bottom side, though I'd prefer the upside based on all of our trend-based stuff. And we could trade within the channel. So we have quite a lot of opportunities here on the euro yen. Not a bad pair for this week. So what about the pound yen? It's worth checking other yens as well. And in this video, we'll just look at the pound yen. So we have a key level of support down here where the market has found that support on the monthly. It's rejected that level. You can automatically see that the same type of pattern could be happening where we've got a double bottom here on the pound yen, but it's not even near as complete as that euro because the euro has been stronger recently. So nothing much going on with the pound yen in terms of how strong we feel about it on the monthly. On the weekly, we can see here that we have broken past what could have been perceived as a double bottom with a massive wick over here. Don't really like this as much, and therefore it's not going to be as important to me on these time frames. Daily, again, same kind of thing. Double bottom here though on the daily on the smaller time frame. Notice this. If we go into the 4 hour, straight away we'll be able to see this was a great swing trade that people were taking last week. So they were basically trading between this zone here, and then they were trading here. And this is a good zone because on the left we have supports, we have our resistance, it broke through. Notice how it comes back, tests it, the dynamic moving average. I love this. This is the best thing that you can see, and that has me excited on the smaller time frames. So my focus would be drawing those bigger time frame support resistances on the pound yen, noticing the interaction even with this zone over here at the 134 kind of 20, and then also noticing the 135.0 psychological level is acting as resistance. So I'd be trapping the pound yen on this 4 hour, taking a look at it, and definitely considering some trades here. But the euro yen also has me quite interested. Let's just quickly discuss gold. Big channel we've talked about on this channel over the last couple of weeks, and that has fully completed. Now we're seeing on the daily a bit of another channel which we can then dial in on the 4 hour. So market has been trading within this zone. We talked about it all last week on the videos, and it is trading very nicely between the 1812 area and the 1795 area. This is great level, and if you see it break either way, the more it coils within this range, think of it as a spring. The more it coils within this range, when it gets out, it'll be more explosive. That's important when you're considering these kind of levels. So I quite like gold this week. It's definitely one to also look at, set alerts for those sides, and then make your own decisions. So hopefully everybody's enjoyed this video today. We'll be doing these every single week, so make sure you subscribe, like the video, and of course, comment down below with your favorite pairs to trade in Forex, and let me know what ones you want to see over the coming weeks. Thanks everybody, and happy trading and investing this week. Bye.